please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani Gujral and Mitesh Thakkar with us for BTST calls. Ashwani, you've given us the index view. What about individual stocks?
See, HDFC Bank is a buy with a stop of 1990, target of 2040. Godrej Industries is making a strong move. That's a buy with a stop of 588, target of 610. And Vedanta is a buy with a stop of 283, target of 297.
Okay, fair enough. Those are Ashwani's calls. Mitesh, let's get your trades in as well. I'm guessing you're going with buys too.
See, actually, I have one buy and one sell. And,
okay.
In fact, both of them from, you can say, related to infra and power. I think CG Power is something which is breaking down. So I'll take a sell there with a stop at 80.10 for targets of 75. And L&T is a BTST with a stop at 1374 for targets of 1402. And we talked about, getting long on the Nifty. I think we're carrying that position as yet, despite the fact that we have that risk of exit polls. But given the fact that the market reaction is finally showing that we are ready to settle about 10,760, 780 zone, I think it does make sense to carry on your long positions until you are trapped with a big gap down. I think the market is possibly likely to drift further up on Monday as well.
Okay, big move right now for the market. Of course, the Bank Nifty, we spoke about 26,300. It's now going to 26,400. Just see that move on the Bank Nifty in last few minutes. It's been a vertical move that you're seeing right now. This is a bit of a breakout that the market is staring at right now. Rupesh Patel, fund manager at Tata Mutual Fund, is now with us on the show. Rupesh, good afternoon. Thanks a lot for joining us in the studio.
Thank you.
Let's talk about one space which has done really well, and you have, of course, a lot of stocks here. Consumption, the kind of move that we have seen in names like Jubilant Food, Bata, Future Retail, Tata Global. The million-dollar question here is, is this sustainable? Do you think this kind of CAGR is possible even in future as well?
So I think when we look at consumer stocks, the way to look at it is that the runway for growth for consumption as a category in India is huge. Look at the fact that half of our population is below 25 years of age. So as India grows, as our per capita incomes grow, not only will see creation of newer consumer categories, but more and more people will join the consumption pyramid. And not only that, people who are current consumers, they will move up the pyramid, they will premiumize, and these are the things which are going to drive growth for consumer sector. So I think consumer sector, the stocks, they are more structural in nature. No doubt, I completely agree that in terms of valuations for some of the stocks, near-term valuations look a bit stretched, and one should not be surprised if we see some kind of time correction there. But considering the size of opportunity, runway for growth available, I think it makes sense to remain overweight in consumer as a category.
So you have a lot of interesting consumer stocks in this fund, Rupesh. The fund's been doing really well as well, by the way. I think 1 year return 35%, so it's much better than the benchmark. But you're playing Alco Beverages, you're playing something like Tata Global. You are also into retail. Let me ask you about retail because of this big mega deal that's happened. Do you think this will lead to a slightly longer term re-rating? I mean, what is it that you would expect from stocks like Future Consumer and Future Retail?
So I won't discuss stocks in specific, but look at it this way. One of the world's largest retail chain decides to put $16 billion in a play. This is not a call on a particular company. I think this is a call on the sector. This tells you the size of opportunity which is potentially lying there. So I think the trick is we have to look for companies, we have to look for business models, we have to look for managements which have it in them to participate as this category grows and really the opportunity plays out.
Okay, that's some news on the screen. The market doesn't care about it right now, though, frankly speaking, because this is all known information. There's been a bit of a hit on marketing margins, and of course, we haven't seen a revision since 24th April. But the stocks are at the high point right now. The market is already moving on that. We saw that reaction, of course, on the way down earlier. But Rupesh, a lot of banks in your portfolio, and all of them, HDFC Bank, ICICI, Yes, Kotak, I think except Axis, I can see all the big ones. Your thoughts on the kind of earnings season that we had, and more importantly, the kind of reaction that the market gave to stocks like Axis and ICICI?
So I think even on previous shows when I had come, I have been mentioning that we are structurally positive on private sector banks because today if you look at share of public sector banks, then they have about 70% share in advances. Going ahead, we believe, I mean, if you look at private sector banks, they have high return on assets, they are well capitalized, they're run by decent managements, and in last few years, many of them have meaningfully expanded their branch networks, thereby improving their access to low-cost current accounts and savings account deposits. So given this scenario, I think private sector banks play that is more or less structural in nature. They'll continue to gain market share from public sector peers who are constrained on capital and struggling with their asset quality related issues. So that's on private sector banks. Coming to specific questions, maybe I would say directed towards corporate lenders. No doubt corporate lenders, they have suffered in last few years on account of asset quality related issues. But we believe that large part of pain, I mean, it has been recognized, it has been identified. Maybe next few quarters credit costs will remain on the higher side. But considering for some of the names, if you look at the quality of their retail franchisee, if you look at the value which they have created in their subsidiaries, I think absolute valuations, they look quite attractive, and hence we would be in those stocks.
Okay, fair enough. You also have some holdings in Aviation. Yeah. Interglobe is one of their holdings. I know you won't talk stock specific, but we've had very mixed trends this quarter. We've just heard from the other airline company today. Interglobe gave us a shocker this time around. Crude prices are touching $78 a barrel. Still willing to keep the faith on this sector?
So no doubt, near-term crude oil prices going up, that is something which is negative for aviation stocks, because only time will tell that to what extent you can pass on this increase in terms of passenger fares. And I mean, I'm sure at some point that inflection point will come where an increase in fares will start hurting the passenger growth. But as of now, it appears that if you step back and are willing to look at a bit longer-term story, then the growth in air traffic that is for real. We have seen last many quarters now wherein growth in air traffic has remained around 18-20% kind of a range. And then if you have some good players who are able to have good control on their costs, I think they would benefit a lot from the trend which is playing out.
Okay, a word on the overall market setup itself. How do you view it now? Last year was, of course, a big one. You can't have a repeat of that. Or can you? That's, of course, the first one. And in light of the correction that we have seen and now the subsequent recovery, your thoughts on risk reward right now?
So I think the way we look at current construct of market is, if you look at 2014 onwards, India was more of a macro story wherein everything was going for us. So macro parameters like current account deficit, fiscal deficit, inflation, interest rates, everything was trending down, and crude oil correction in crude oil prices, they had given us big tailwind. Now, from that point to this point, we have started seeing moderation in these parameters. Crude oil prices going up, I think that's a big risk to India, considering the fact that we import 80% of our requirements. Going ahead, I think how government really passes on this increase. I mean, if they allow OMCs to pass on this increase, then eventually it will lead to higher inflation. Or if government decides to absorb on its own, then it would lead to higher fiscal deficits. So I think there are very clearly macro headwinds which are there. There is some normalization. I would not say that we are in a precarious situation like we were in 2013 when taper tantrum happened and currency also went into a tailspin. So we are certainly not in that kind of a situation. But given this macro construct, I think it's but natural to expect that the PE numbers, the PE valuations which we are seeing, there should be some kind of derating, but at the same time there are very clear green shoots. So for example, look at CV data, look at volume growth in across consumer categories, look at cement, I mean, where we are seeing volume growth. I think government capex is also happening in select areas like roads and all. So very clearly there are green shoots. Rural consumption is picking up after slowdown in last few years. So very clearly green shoots are there. Going ahead, I believe market returns this year would be more an interplay of valuations and earnings growth coming. We believe markets will remain volatile, and this would be a year of stock picking really.
And finally, today's momentum, obviously the market is looking at some sort of a clear verdict perhaps in Karnataka. Elections and politics, do you think these will be big factors over the next 8-9 months? Or do you think the market will stick more to the micros and the macros that you described?
So in my experience, I have seen that markets tend to react to these election outcomes in very near term. But over a longer period of time, this just remains a blip. It's more governed by fundamentals than any election outcomes.
Well, 10,800 and holding on the index. Beyond the index, a couple of stocks are looking interesting. Hexaware is attracting the buyers once again, 5% up on that stock. Maybe we can pull that up. Memphis is actually cutting some of that loss. It's still negative, but it's trying to rebound from the lows of the day. And Den Networks looks interesting, 8.5–9% up now, nearly on that stock. Some mid caps which are on the move. But Anuj, as you're saying, this looks like a big boys party this Friday, right?
Yeah, and you know, Surabhi, these are the days when you have to capitalize, frankly, as a trader, because that's been the anecdotal evidence, and you know, you saw, and your stop loss was very clear and very nearby. But you know, just take a look at, for example, what's happening now with Union Bank. I think the banking space is now going through big buying. You know, you saw that big move happen in HDFC Bank. Now it's ICICI Bank. Pull out the intraday chart of Union Bank, and this is where, you know, what would have happened today, for example. We had the numbers overnight here. Everybody got short this morning, and then the stock started to recover. We had the management come out and say that, look, the worst is behind us, and now, you know, the bank is ready to move on. That would have led to some short covering. And then, you know, this kind of move after that, then, you know, the rest of the world, covers the short. So, but the way the bank Nifty has moved, it's quite interesting. Especially the big ones, ICICI and HDFC Bank. Right now,
even Axis actually is making a bit of a move now.
Exactly. So I think, in fact, if you take a look at PSU banks, in general, they're seeing big buying. You spoke about Union Bank. From the lows, most of these banks are actually recovering. SBI, for example, now at the high point. Ashwani, this was one of your intraday calls as well, that perhaps PSU banks are seeing some buying. But thoughts on some of these names like SBI and Union Bank here?
And let's not get overexcited. I mean, yeah, shorts have been covered. Maybe they can rally a couple of days. But PSU banks don't have that kind of strength unless there is, some sort of, game-changing reform or something happens. I think you still have to go with the retail private sector banks and the corporate private sector banks. I think leaving out the rest is probably a good idea.
Okay, all right. Deepan, before we let you go, any new stock idea, anything interesting from the earnings landscape that you've spotted?
Oh, I think we need to look at the cyclical businesses again, the likes of say HEG or JSPL or so, and I think next 2-3 quarters look interesting for those companies, and you could see a further trading bounce in them. Apart from that, I think of course Titan, a favorite of ours, came out with a very good set of numbers, and I think we have seen, because the stock price has moved up, a little bit of compression of the price earning multiple, and maybe at these levels it's a good idea to get into and make it part of the core holdings. So apart from that, I think the earnings season we are just watching, and so far more or less the numbers have been as per our expectations. Even Aisha, I thought, came out with a good set of numbers, and we are seeing the P's getting compressed over there and a bit of margin of safety as well coming in. I think that after this earnings season, we may have many more investment ideas and fresh investment themes than when we enter. I think we just need to get over this Karnataka election, and then it will be business as usual, and whatever the outcome is, we would see a revival of the bull market from that point on.
Okay, all right, Deepan, thank you very much for joining us on the show today. You have a good weekend. We'll catch up again soon. Well, speaking of earnings, the big one on Monday to watch out for is going to be HUL. So is the consumption story going to continue look as strong? Let's ask Manglam. Manglam, what are you expecting?
Well, for HUL, we have a cheat sheet, and that cheat sheet is the parents' results. And out there in the first quarter of CY18, Unilever parents said that the Indian business continued to demonstrate broad-based volume gains. So that is something that the street is working with. A large part of it perhaps is played out in the stock price itself. The strongest FMCG stock up about 80% since the start of 2017. No mean feat for Hindustan Unilever. The three big numbers to watch out for. First is volume growth. The street is working with a range of 6 to 8%. An equal part of street believes either it could be 6% or 8%. So we're watching out for that range very closely. The other thing we're watching out for is EBITDA margins. They're likely to expand by about 120 basis points. And thirdly, we'll watch out for the qualitative commentary that the management management has to give on rural growth, new launches and input prices, because when HUL says it, the street does listen to the rural growth impact, at least in that particular quarter or the year. Because if you take a look at the numbers, total income growth of 8.3%, 8895 crores on the top line is something we're watching out for. Margins close to around the 21.3% mark, and net profit growth of 15%. Keep an eye out on the volumes. Watch out for the management commentary on rural growth and new launches.
Okay, Mangalam, thanks a lot for that. 5 years back, around this time, Unilever had launched the open offer for HUL. The stock used to trade somewhere around 400. The open offer was at 600 rupees a share. That was the big bet that they took on that consumption story, and well, just look at that. Since then, 1500 now on the stock. Mehrbun Irani is with us now. Mehrbun, good afternoon. Since we're discussing lever, your thoughts on the stock?
Positive on the entire space, consumption space, and that doesn't restrict myself to only the FMCG companies, the entire consumption space. But the fact is that the market has been led over the last 1 month by most of the consumption stocks. So in terms of valuation, some of them look rich. Like look at what has happened to Titan today. Excellent number, the share is not reacting. The point is what lies ahead, market is largely expecting a large part of it. But I like certain names in this complete space, which includes ITC and Imami, which I think in terms of stock valuations look attractive, and I personally believe that relatively they are underowned.
Just a follow-up question on the same, Mehrbun. Is that what's happening, let's say, to a Westlife or a Jubilant as well? Because the numbers look great. The stock didn't budge after that. So what would your thought be on some of these discretionary plays? Staying, there are no jitters out there, and we are looking at 10,810 thereabouts on the screen. Mehrbun, what sense have you made of this OMC rally last couple of days? I mean, you know, even now as I talk to you, HPCL is up 3.5%. This week, the stock is up 8.5%.
I think the way the stocks had come down was largely because of the fact that oil was going up. People spoke of oil going above 70, 75, people talking of 80, but somewhere along the line there is also a distinct possibility, and that is why the market is taking it that way, because oil production is at a record high. I think inventories are quite firm as far as US goes. So somewhere market feels this is an aberration, and somewhere possibly oil will also crack. Maybe not in a hurry, but it will ultimately happen. The prices at which the stocks are has definitely induced some people to go in for value buying. PPCL at the price at which it had come down to, I think it had broken a 52-week low and come down sharply after that. I think at that level, how much more do I lose? And if oil corrects and goes back to say 68, 70 again over a period of 1 to 3, 4 months, I think there is a distinct possibility that I end up making 10-15% returns on frontline stocks, and that is what I personally believe. I would not use the word contrarian buying. I would like to use the word value buying, because a large part of the negatives were there in the prices.
Okay, by the way, Dena Bank, now that of course is really the smallest of the ones now, but a big loss, 1220 crores versus a loss of 575 crores. But Mehrbun, you know, in terms of big reaction that we have seen today, what have you made of this big move in the HDFC twins today, especially in late trade?
See, I think what we are going to witness next week is a large part of the nuisance value, nonsense value, something called political noise will be out. We will have a market which will be possibly opening up with a gap, or possibly opening down with a gap, depending on what the numbers are going to come as far as expectations goes. I'm talking of the exit poll numbers. In such a scenario, I would also like to prefer to take some money off the table and go in for possibly safer stocks, and HDFC and HDFC Bank qualify in that. And I think I heard one of you all possibly describing it as a big boys party, and that is certainly the reason that is what is happening today. Like, people don't want to come out of the market. They would like to go and reinvest some of the money that they have taken off into safer stocks, and HDFC and HDFC Bank qualify. And that, besides that, honestly, I don't see any reason as to why they have suddenly shown a sharp spike in the last 1.5 hours.
Okay. By the way, just pull out the intraday chart of Sun TV. We are still expecting numbers, but the intraday chart is quite interesting. It's you know, almost like a big buying in last 5 or 6 minutes of trade. Look at that. And if you know, if we just see the volume chart as well over there, ahead of numbers, there's quite a bit of buying which is happening in Sun TV, which is quite interesting. Just look at that, Surabhi, from 865, I think, to 876 in a matter of 2 or 3 minutes. Big buying happening over there.
Absolutely. I don't know. Z had pretty decent numbers in terms of ad revenues. We are expecting solid numbers from Sun as well. So let's see if they can deliver. By the way, as we're closing out, Axis Bank has seen some heavy ticket, whether it's shorts covering or whether it's fresh people getting in and buying, not sure. But the stock is ending sharply higher at the highest point of the day. So we've just got about 2 minutes to go. Ashwani, just your thoughts on, the final rates, how we are seeing things play out. And I know you've said don't carry positions home anyway. Now, what would the best approach to Monday be?
See, Monday, if you gap down, say like Gujarat, etc., then that would be a buying opportunity because, while we would like to think that this is indicator of general election, I was around in 2003 when BJP won all 3, state elections and lost the general election. So I think it's a 1 hour, 2 hour event on Monday, and then from lower levels, buying should return. So in case there is, a favorable outcome, I would think people would take profits because it's been a long rally, and this is kind of, culmination of that. So if it's positive, not too much upside. If it's negative and you get 300, 400 point downside, that would be a good buying opportunity.
Okay, a minute to go, and bulls are going with the belief that they're getting a favorable outcome in Karnataka, Anuj, I guess, right?
Oh, yes, and that won't matter beyond a point. Today has once again, emphasized the importance of risk reward. I think today was the day when the risk reward was in your favor, especially after a minor gap up, only 20-point gap up. Global cues positive, last hour surge likely. And I think the bulls have really taken that opportunity with both hands. In terms of stocks, well, the biggest move happened on account of HDFC twins, HDFC and HDFC Bank. Though it's only 1%, 1.5%, but large enough for the index, of course. Kotak, Axis, ICICI. So financials did well. Larsen & Toubro was up about 2%. Lever was up quite a bit in trade ahead of numbers. On the way down, Sun Pharma and Bharti Airtel, 2 big losers. Sun down 5.5%, Bharti down 6.5%. And of course, Titan, some profit taking after the numbers, down about 1.5%. Second time running, Titan has gone to 1,000 and has slipped from there. So that now establishes 1,000 or 999.7 to be precise as big resistance.
Okay, on the mid-cap side of the market, gains coming through, yes. Nothing as close to the large-cap indices. There's a far more muted 50-odd point rally on the mid-cap index. But if I talk about the big movers and shakers, Hexaware, the buying was back. That really, for me, was the stock to watch in the afternoon. It's ending 7% higher. Look at that, the way the buying has emerged. Let's get Memphis's back on the screen as well. Sasken has seen about a 9% up move as well. That's a sharp recovery even on Memphis's. That stock was down a lot more as we had started off the show. So those are some of the big names. Nestle, of course, was the shining star from the consumption basket, 5.5% up. If you talk about some of the others, Westlife, for instance, reported numbers, but no enthusiasm, maybe because of the run-up. So 4.5% on the lower side over there. We are still awaiting numbers from Tata Global. That's going to be a stock to watch as well. If I talk about more earnings, then we have seen the positive rub-off continue on an Ujjivan, about 1% on the higher side. These are some of the names that kind of balanced out. On banks, Indian Bank managed to recover as banks were generally moving higher. Indian Bank was up about 1.5% as well. Other stocks that did well, Den Networks 6% higher, JSPL 4.5%, PTC found some buying action, and BEML was definitely a momentum stock today on the back of Karnataka, 4% up on that counter as well. India Cements has seen some buying traction. Then you have names like Voltas that have worked out really well. NIIT Tech, 2% higher. So this decent list of winners actually, even in the mid-cap universe. On the flip side, the biggest casualty today was Rain Industries, 16% down after numbers which look kind of okay, not that bad, but lots of profit taking. Idea Cellular has lost between 9 to 10%. We have seen some weakness on PC Jeweler once again, 4% on the lower side. Fortis Healthcare, with all this drama around the bid that has been selected, 3% on the lower side. By the way, PNB has still ended down about 3%, while other PSU banks managed to go positive. Not this one. This is still ending with a cut of almost 3%. So, Anuj, I guess for what it's worth, ending on a positive note.
Oh yes, ending on a positive note. Let's see how Monday shapes up. Now it's interesting because on Monday you'll be reacting to the exit poll numbers. And on Tuesday, you'll be reacting to the final numbers.
Yeah.
On Monday, when you will be reacting, you'll have the numbers or exit poll numbers that will be known to you. On Tuesday, you remember the Gujarat election.
I do.
And if it's that kind of cliffhanger, I think Tuesday morning is going to be really interesting. Watching
you should be ready
numbers.
with lots of tea, coffee, whatever else that you need for the first 2 hours at least.
So I think Tuesday is going to be quite interesting. But let's take some final thoughts then from our guests. Mitesh, your thoughts for Monday straight?
I think very clearly events can be tricky, but for the time being the market reaction is positive, and both in the Nifty and the Bank Nifty. Yeah. So I'm slightly inclined that at least Monday should be trending up, while Tuesday could be choppy and volatile, and we saw that kind of strong choppiness during Gujarat election results when earlier Congress was leading and then BJP again took the small kind of lead and then the markets recovered. So I think that all kind of movements can play out. But for the timing, I think Monday, if we get a stronger opening around 10,840, 850, I would be inclined to take some profits as well as revise long positions, revise stop loss on the long positions on the upside. Yes, otherwise, I think apart from the index trading, I think on a stock specific basis, we trade with stock specific levels.
All right, Ashwani and Mitesh, many thanks for joining in. You have a good restful weekend. We will catch up again. Promises to be an exciting week. Mehraboon, before we thank you, final thoughts. If anything stood out for you in the earnings season so far, any stock where you like the numbers so much that you have conviction to buy fresh?
Well, there are quite a few. I think the market has reacted, possibly done justice as far as the fact goes. Valuations were expensive, the stocks reacted the other way around. But one number which came yesterday, and the market gave it a thumbs up, and then the stock reacted the other way around. But I personally believe, and I'm quite convinced, the numbers were brilliant, management commentary is good, and that is emphasis. I think there is a clear dichotomy in the market between the frontline IT companies and the mid-cap IT companies. I think the earnings of 12.5 rupees for the quarter, I think if you just extrapolate it with maybe a 8-10% upside for 2018-19, you are looking at an earnings of around 56 rupees coming in 18-19. Now, in the next 6 months, the market will look at possibly 19-20, and if the earnings should be around 60-65 rupees, and the management is possibly giving an indication it could be higher than that, at 60-65 rupees 2019-20, even if you give it a PE of just 20, and I'm not saying 23, 20, I think you have a clear case for a price of 12.50 for the stock. I personally believe the present price, which is 975, 980, 990, whatever you all are discussing right now, which I was hearing, I think could possibly be the bottom for the stock for the next 1 year. So I'm quite positive on Intellect amongst the names which announced numbers yesterday.